Good morning, and let me explain the significance of that music that I was playing and the significance of the cowboy hat that I just had on. My name is David Lincoln. Welcome to the Short Vol Show Live. You are watching me coming to you live from Cape Cod, Massachusetts, home of the Pilgrims. The cowboy hat has a recent significance in that while I was away from YouTube for a couple months, I actually took up a couple acting gigs. Not acting gigs, I'm sorry. I mischaracterized that. I did some background gigs, which isn't acting. It's just getting paid to be in the background of movies and TV. And anyway, so one of the ones I did was I was and I guess I'm not supposed to share too much about it because the movie hasn't come out yet. But anyways, I was a gay guy in some scenes in a gay bar, and I was supposed to dance, and I can't dance at all, and I'm not gay, but I guess that's why they call it acting. Anyways, and one of the outfits, they had me dressed in two outfits, and one of the outfits was this cowboy outfit where I had that hat on and a big cowboy outfit, which was kind of fun and hilarious. I had initially thought it was going to be intimidating doing the movie, but it turned out to be just all fun. And once you get there and you're waiting and holding for so long, you think you might have stage fright or something, but in the end you just end up being competitive and wanting to get on as much film as you can possibly get on and get in front of the camera as much as possible. And that's kind of the way it turned out. And coincidentally, I also got another acting gig right after that where I was a background actor in a HBO show about Julia Child, the celebrity chef. And in that one, I was a college professor, which I was supposed to be a Harvard professor in the background, which I probably am better suited for than the other gig. But either way, it was fun stuff. And the significance of the music I was playing, that would be the theme to a long-running series on British television called Inspector Morse. Now, Inspector Morse ran for a while, and the key actor in that one was, I believe, John Thaw, and he passed away. But once he passed away, they made a show about his assistant called Lewis, and after that, they made a show about him when he was younger called Endeavor. Now, Endeavor's final season is, I think they've probably finished production of it yet. It hasn't come out on TV yet, but the final season is coming up soon. So it's kind of a funeral dirge for that whole 3-show arc as I play the Morse theme in the background. But that's where that comes from. Some of you will know about that. Moving on to trading, so great victory yesterday in that I came in short KOLD. Now, just to go through the trade, I initially bought some August 40 puts in KOLD, and it was going against me for a couple days. Let's pull up the chart here. KOLD was trading around $50 when I bought puts. And my premise was essentially that natural gas had been going down for a while and was due to pop at some point. So KOLD is an inverse ETF. That means that if natural gas goes up, KOLD goes down. So if we look at natural gas here over the last few weeks, and let's back out even farther. Let's do 180 days on I'm looking at the NASDAQ. That's why that doesn't look great. Look at 180 days on natural gas, and we can see the down move. It's come all the way from 8 down to 196. Then we got the pop to 3, and it was right in this area here. Let me make sure I'm not standing in the way. All right, so I guess I should pull up the charts here. All right. So here is the chart of natural gas, and you can see it bottoming out here around $1.9, but you can see it coming down once again. Sorry, I didn't have it in front of you before, but you can see it coming down here from 7 all the way down to 1, and then it pops to 3, and then it gave back a bunch. And so it was right after the pop to 3 and where it gave back a bunch that I got in the last few days. And then if we close up here, you can see where it says 3.6 on the chart. I kind of got in on like the 10th or something. So it was down around 2.5 where I got in. But you could see before this pop yesterday, it was just going down every day. And it was kind of depressing because I got in. It felt like it was just going to continue going down forever. But we got this big pop right around the open yesterday. And so to just explain my position once again, I was long the 40 puts in KOLD. Now, KOLD, remember, is the inverse of what's happening here. So if we go to KOLD, we can see KOLD come down from 84 here. And this is the last few days. If we go to a 5-day, 15-minute chart. So I got into KOLD on Wednesday here. So you see Wednesday on the chart, KOLD's trading around 50, 51. I bought the 40 puts, and I got hurt Thursday. I got hurt Friday. And on Friday, what I did was I did a trade where I sold one of the 40 puts to buy 3 of the 30 puts. So I did a 1 by, so I did sell 1 August 40 put, buy 3 August 30 puts. So I did this trade to get me long. I was long, I guess 5, 6. I was long 6 of the August 40 puts, and I traded that for being long 18 of the August 30 puts. And so that was right on the close Friday. I did that. So coming in Monday morning, I was short just around 200 deltas in KOLD, and it initially rallied against me, but right on the open, it was down like $8, and so it was like a $2,000 winner for us yesterday, which was great. And so you can see it move down here during the day, and about 10 o'clock, I covered the entire position, and then that made me happy that we started to go back up. I'm like, I was right, I covered the entire position, and then as we moved up here again, I'm sorry. I covered the entire position, and I actually got long slightly a little bit of KOLD via buying. I bought some of the 50 calls down here around 11. I bought some of the 50 calls. And as we rallied, as KOLD started to rally back, I hedged those calls by selling front week calls against them. So essentially my position here around noon was flat delta, short gamma. So what I wanted to happen was KOLD to stay kind of range bound, and so that leads to where we are right now. So if we look at our chart, if we look at our analysis tab here, you can see flat, collecting $82 a day, looking for this to stay range bound. And if we look at our risk in graphic form, you can see we make money if this stays around 51 the next couple days. The calls that I sold expire on Friday. Today is Tuesday, so we stay right in this range. I collect $82 a day. So essentially a flat position, but with just a little bit of curvature to collect some decay. Meanwhile, if we go back to our daily here chart, around 11 o'clock when I realized the win and took the money off the table here, I turned to Tesla, which was down, and I bought some Tesla calls and rode Tesla up slightly, and then once again hedged the calls I had bought a couple weeks out by selling front week calls against them. So I have a similar position now in Tesla where I am basically looking for Tesla to stay range bound. You can see I'm good here up to about 184. Between 167 and 184 I make money, and it's just looking for it to be range bound. Now my plan on Tesla is to buy to get long on pullback. So if we get another pullback to 69 or something like that, then I'll look to accumulate some deltas. If we look here, the low got to 163, but I'm definitely bullish on this one, thinking this is going to go back towards 200 at some point. I don't know when. I don't know if it's today, tomorrow, in a month, or a week, but I definitely am bullish on Tesla here and looking to accumulate deltas on pullbacks. So that's kind of where we are. I'm certainly reinvigorated by making a little money yesterday. It's can be disheartening to trade for days in a row and not be profitable. And it's even more disheartening when you're actually running a YouTube channel about trading and you're sitting there losing money. It's like not a great inspiration for your followers. And not you, whoever's watching me right now. Of course, I'm not talking about you, but some people out there that watch YouTube only will watch people that make money, and they're only interested when people are making money. Conversely, a lot of people like to watch YouTubers who talk about how the market's just about to crash and talk about doom and gloom. People that come online and say, it's just about to be the crash. We're just about to, everything, financial markets are just about to collapse. People love that stuff, and you get a ton of followers. The thing is that when you keep saying doom and gloom and it never happens, eventually the followers are going to lose interest, I think. And for me, YouTube is not about gaining followers. It's about honesty. It's about being genuine in who I am and conveying my thoughts out there into the ether of the world. So, yes, certainly I'd love to have more followers, and certainly I want to provide some sort of product that's attractive to an audience, but not at the expense of being genuine or giving misinformation. And to me, it's misinformation calling out the doom and gloom and that the market's going to crash pretty soon, because just based on probabilities, the average view or the viewpoint that I take about the market most days, and which I believe to be the correct one, is that we are going to slowly rally, because that's what's happened over time. The averages over years has been the market slowly rally. So, but that's not an exciting message to convey to people. People want to hear excitement. They want drama. So if I come on and say my opinion of the market is we're going to slowly rally, it puts some people to sleep. However, I believe that to be the correct way to approach things, and we're all here to make money. My goal with this channel is to help you make money. That's the ultimate goal of the channel, and to do so by conveying my journey and my thought process, and also just the skills I have. The unique skills I have is I know how to execute trades. I was a market maker. I was a SIBO market maker, a floor trader for many years. I have some understanding of markets. I have some expertise in the VIX. I have some expertise in just execution of trading options. And I've seen it all as far as what stocks can do and how you can get hurt, and how you need to manage risk to survive. The key, one of my key philosophies is just that if you can manage risk and avoid losing money at key moments, then what's left over is profitability. And I've been fortunate to have dodged several bullets so far, and I hope to continue to do so. So there you go. There's my little bit of philosophy for the moment. I will allow you to resume your day, as this has gone a little bit longer than my videos usually do, as CPI comes out. Let's just take a quick look at the markets before I leave you. It looks like CPI was sort of a non-event here, as markets aren't really doing a whole lot. Let's just take a look at NASDAQ here. You can see this big candle here is when CPI came out, and it's bouncing all over the place just for that one brief moment. But you can see kind of a non-event so far here. I believe Tesla is going to rally off here, but my position right now is essentially, like I said, short the 75 straddle due to the fact that I am long a calendar spread. If we look at the position. I'm going to make sure you can see this in the bottom of the screen. Let me get out of the way here. If you look at the Tesla position here, let's see if I can pull this higher. Just to center this. It's essentially a calendar spread. I'm long the June 75 and April 75 calls, and I'm short the March 75 and 77 calls against them. I did sell one 77.80 call spread to kind of flatten out my delta, but essentially, when you're long a calendar spread like the 75 one here, you're essentially synthetically short the 75 straddle, but it's a little bit safer than being short the straddle, as you can only lose the amount that you paid for the spread here. So it's kind of where we are. If you look at the chart, however, or the risk profile, it's very similar to just being short a straddle, right? You make money if we stay at 75. You lose money as we move away from there. This is kind of my go-to sort of holding position in a lot of these issues, because I like collecting a little decay, and generally I kind of default back to this overnight at times. We'll see what happens from here, but I'm definitely looking to buy this on pullbacks. You know, in general, you could certainly say that Tesla's been trending lower as of late. I've talked about this before, but it was unable to kind of break through that 220 range recently. You can see here it's coming off that 101 level, got up to 220 and sort of encountered resistance, and then fell back here. And well, this chart is a little bit more ambiguous. It always depends on the time horizon of your chart, what ultimately it looks like. If we go to let's see, 180-day chart here, it seems to be kind of, you know, we popped up this 101, but it seems like we're in a long-term downtrend if you look at it this way. But as far as I see it, we had this huge sell-off in the markets, and this bottomed at 101, and we will move higher from here. So the question is does it continue a little bit lower before we move higher, or does it move higher from here? And that's a question I don't have an answer to. At the moment, I am flat delta and looking for it to just stay range bound. But if we do get a move down, I probably will accumulate some deltas. Here it's showing me actually within one delta being flat, so perfectly flat. Anyway, so that's where we are. Thanks for watching, and I will check you in the next one. Have a great trading day, everybody, and thanks for checking me out. You're watching Famous Day.